how to improve your credit so you can get the best financing terms out there anytime you get a loan. Hi guys, this is Sidrid Veselai. Welcome back to another YouTube episode. Really looking forward to this one. This comes up a lot. Why is my credit score low? So we're gonna dive a little deeper today, but we're gonna cover the basics. Nothing crazy. I'm not a credit expert or anything, but I've worked with clients to pre-approve them for loans and mortgages. So I do see a lot of credit reports and I've seen trends in the past. So I hope this will help you out. So how do we improve our credit? A lot of you may say, well, what happened to my credit, right? Number one, and this is very common sense. People tend to overthink this, but it's paying on time, right? Whoa, it's no secret, right? You gotta make your payments on time. Like, if your credit score drops by 20, 50 points, it's usually because you missed a payment. This could be a credit card, personal loan, mortgage. Usually you have a 30-day grace period. Not grace period, but you may get charged a penalty, but as long as you pay within 30 days, the companies will not report it as late. So make sure to pay on time. And this is my number one tip for that. Set auto payments for all of your loans, payments, anything that will impact your credit. Make sure you have it on auto payment. Set up the minimum payment so at least you know that whatever that minimum is, it's gonna go out and you're never gonna be late. So make sure to pay everything on time. That's number one for your credit. Number two, this is probably the biggest one in terms of weight, I would say, is your credit card utilization ratio. What does this mean is how much you're using versus what your limit is. So let's set an example. If let's say your limit is $1,000 and you're using all of it, you're at 100% credit utilization. Ideally, you want to be under 30% and sometimes even under 10. What this means is, let's say your credit limit is $1,000. Do not spend more than $300 on that credit card. Do not wait for the statement to come up for you to pay your credit card. Pay it before so it's under that 30% utilization limit. So second one, make sure that you're keeping your credit utilization low. This will always help your credit score tremendously. Now, third one, a lot of people have stuff on collections, whether it's medical bills, whether it's a past due electrical bill, whether it's an unpaid credit card, or something happened with any of your other loans and it got sent into collections. It could even be a $20, $50 amount. The best thing to do is call that collection company and try to settle any collection that you have and ask them to remove that collection from your credit report. A lot of collection companies will do that. Now what will happen is, if that collection shows up in your credit, it's likely going to impact your score. But even if it shows up and the collection company has a way to remove it, they can do that and it will help your credit score go back to where it was. Always call the collection company and find out whether this is doable. Try to settle something with them because it will have a huge impact, because that collection may stay in there for 5 years, 7 years, depending on the credit bureau. Number four, do not close any of your credit cards. I know you may have heard differently, but do not close them. Keep them with a zero balance. All those credit cards are doing, they're helping you with your credit history, how long you've had credit for. They're not going to impact you in any negative way. Every month, those are being showing that you're making a payment even though you're not. Just keeping a zero balance, it's showing like you're on time payment every month for each of these credit cards. So make sure to keep the credit cards open, and I would advise an extra step, use them once every 2 years, because if you leave them inactive for 3 years, they're gonna get shut down from the bank or from the credit card company itself. And last one, without abusing your credit, but open different types of credit. I mean, do not open unnecessary credit, but open different types of credit. Let me explain. Have a credit card, have a mortgage, have a student loan, have a personal loan if you need it, right? Having different types of credits helps your credit score. Now, again, do not get any credit that you don't need. But if you have different types of credit, it's okay and it's good for your credit. As a matter of fact, you'll see if you ever like pay off your student loans or any other like mortgage or loan that has to get closed by the time you pay it off, you may see a small drop in your credit because the number of credit types reduces. Always keep different types of credits open because that makes a difference in having a good or bad credit score. Now, I'd really appreciate if you like and subscribe this. More videos coming up. I did have another video on 5 things you can do right now if you want to buy a home in 2023. So make sure you check that out as well. But I thank you. I appreciate you. If you're watching till here, like and subscribe. Thank you so much.